If you'd like to own physical gold, to understand the future value of your gold, it's important to understand where the institutional investors are in their desire to own gold. Well, recently, Wall Street has added over 20 million ounces to their vaults. So stick around and I'll share that story. Welcome to Silver Heist. Thank you to our returning subscribers and guests. We're a channel that likes to buy physical gold and silver, and we like a coin with a good story. If you like those things, please subscribe. I'm going to share a recent Wall Street Journal story. A scramble for gold is redrawing the map of the market. More than 20 million troy ounces of gold have landed in New York vaults over the past 3 months. And then here's a chart of gold stored in COMEX approved vaults within 150 miles of New York City. In February 2020, it looks like there were about 7 million ounces, and now by June, there's just shy of 30 million ounces. So over 20 million ounces added to the vaults to support Wall Street in the New York City area. So this is a story from June 11th, 2020. New York faces a gold rush after the pandemic threw precious metals markets into disarray, setting off a scramble by traders to cut their losses. Bullion vaults approved by the COMEX division of the New York Mercantile Exchange house a record 29.7 million troy ounces, according to FactSet data that goes all the way back to 2013. Although 3/4 of that gold, weighing as much as 9 fully loaded Boeing 737 airplanes, has arrived in the past 3 months. The displacement was set off by dysfunction in the market in March and early April, caused by fears of a breakdown in ordinarily frictionless gold supply chains. It has reversed the normal flow of bullion from west to east, redrawing the map of the international gold market. And here's a chart that shows lockdowns prompt worry about U.S. gold shortage. Conventional gold routes could take months to resume because demand that has been crimped in 2 major buyers of bullion, China and India. Gold has reached America from all over the world, said Alan Finn, commodities director at Marca Amit, a company that transports gold securely. The flows into New York are unprecedented. Logistics firms, such as Marca Amit, are working around the clock to keep up, sometimes opting to charter private planes to transport bullion, making their job more difficult. Few commercial planes, the preferred vehicle for moving gold, have been flying in recent months. At the height of the outbreak in New York, planes that did take to the sky often favored carrying medical equipment rather than bullion in their holds. The scramble to get gold to New York stemmed in part from the demand among U.S. investors for the precious metal, seen as a safe store of wealth by many. Gold prices have climbed almost 15% this year, and most actively traded futures rose 1.1% Thursday to $1,739 a troy ounce. The influx gained traction after the pandemic made the global gold market seize up in late March. Investors, banks, and miners used New York's COMEX to buy and sell gold futures, while the UK is the main venue for purchasing physical bullion. Prices in the 2 markets are normally within a few dollars per troy ounce of each other. Traders know that banks can fly gold from Europe to New York to deliver against COMEX futures if prices were to diverge, bringing them back together. Restrictions on movement threatened to stop this self-correcting mechanism, driving the premium for New York gold up to $70 an ounce in early April. The widening caused losses at banks that dominate the gold market, typically owning physical bars in the UK and hedging them by selling futures on the COMEX. HSBC Holdings booked a roughly $200 million paper loss on a single day in March, largely because logistical problems in the gold market moved prices out of whack. The bank's gold traders have since recouped most of that money, according to a person familiar with the matter. To stem the losses, banks almost immediately started to fly hundreds of tons of gold to New York. Having placed bullion in COMEX vaults, they were prepared to deliver gold bars against futures they had sold to clients, closing out their short position. This allowed banks to stop booking mark-to-market losses on trades straddling the UK and US, said Tai Wong, head of base and precious metals derivatives trading at BMO Capital Markets. It was the only way you could say economically, I've closed this position, he said. So here's a chart of Swiss exports to gold to the US. Monthly average from 2012 through 2019, 1.6 metric tons. That's the dotted line. That's the average. And look in early 2020, 40 metric tons, 110 metric tons. So off the charts. Further complicating the task of sending gold across the Atlantic during a pandemic, London and New York required different sizes of gold bars. So instead of transporting gold directly to COMEX vaults, traders send it through refineries in Switzerland and elsewhere. These recast the bullion into bars weighing 100 ounces or 1 kilogram each, making them eligible for sale on the exchange. The flow of gold from the east to the west has been to levels no one has seen in the past, said Frederick Panizzuti, managing director of refining and trading company MKS PAMP Group in Dubai. Banks had an added incentive to ship gold to New York. In doing so, they were betting the difference between prices in London and New York would narrow. This gave them an opportunity to win some money back, trimming their losses. Prices in the two markets have since converged, but the gap remained high by historical standards at about $11 a troy ounce when metals markets closed on Thursday. In the long run, the disruption could erode New York's position in the global gold market at the expense of London by making banks cautious of selling futures on the COMEX. Trading volumes in over-the-counter gold forwards contracts in London have already risen, according to Adrian Ash, Director of Research at Bullion Vault. That would suggest that the market is longer term going to say, if I've got London and Zurich metal to hedge, I'm going to hedge it in London or Zurich, Mr. Ash said. A spokesman for COMEX owner CME Group said its gold futures contract was working as intended, adding that the increase in our inventory level is showing there is plenty of gold in New York. Well, there's plenty of gold in New York. Wall Street is placing its bets on the future of gold. So, is there plenty of gold in your possession? Well, as gold and silver stackers, we've seen the impact of this supply disruption lead to increased premiums on the products that we want to buy. While the U.S. Mint has had to restrict their capacity because the West Point Mint in New York had closed for a short while, so with the low capacity and high demand, the premiums have increased. So is there any relief in sight? Can the Mint catch up? If you'd like to learn how they did recently for production, please watch our featured video.